Good day, everyone, and thank you for joining Liven webinar and webinar recording. Today, presenting myself, Joonas, as CFO of the company, and with me is Mr. Andero, Laur, one of the founders and also the Chief Executive Officer of the company.
Hello.
We have a long disclaimer, basically saying that this is for informational purposes and everyone should make their own decisions. The slides are going to include some forward-looking statements and also some unaudited quarterly data. It is possible to ask questions during the webinar by choosing the triangle, square and circle sign in the bottom right of your screens. And then it opens a new window to check the questions and answers slot. It's marked with the yellow question mark. Here I have in Estonian. You surely have it either in English, Latvian or Lithuanian language. And we'll be talking briefly about Liven, its business and portfolio, the market, and some financial data. And I will now give the words to Andero.
Welcome. Liven was founded 12 years ago in Tallinn. So far, we have completed 15 projects and sold over 900 units. And currently in pipeline, we have 1,600 units, mainly in Tallinn, Estonia, but one project also in Berlin, and this is 24 units, so a very small one. How we differentiate from the competitors is that we include homeowners, future homeowners in the really early stage when we think about the concept of the development, and later we customize apartments according to the customer needs, their preferences and taste. And this customization that we have developed to be efficient is one of our main competitive edge over our competitors. Currently, we have 10 development projects in Tallinn, first in Berlin, and Kantar survey agency is asking who's studying who's the most reputable developer in Estonia every year. And last 4 years, in last 4 years, 3 of them we have been #1 or sharing the first place. Key figures for the last year: revenue close to 50 million, net profits 5.4, total sales 176 contracts, and handover close to 140 new apartments. Our customer feedback has been high last couple of years, close to 10 in our internal rating system. And we started close to 300 new residential units last year and bought some new land plots, estimated more than 300 units. And all the new purchases were done in Tallinn. And we got some good approvals for a long-term zoning projects. Think about the company's history. You could say that there was startup phase, and then from 2017 was a clear strategy and clear focus on interior design and customization, and we increased a lot of land portfolio for future developments. From 2019, we started preparing actually for the IPO already, switched to IFRS accounting, and achieved the most reputable real estate, second place in the most reputable real estate developer in Estonia. And did some financing. We issued the green bonds in Nasdaq Baltic main list. And from 26, planning to expand our business, currently raising money for buying new plots. Our key personas and persons and team, the founders still own 2/3 of the company. We have 2 family offices, key investors that who are both owning around 10% of the company, and employee option program, stock option program, and next to that we have 3.3% owned by employees, and we have raised equity a couple of times from private investors, and this is 8.2% shareholders. Our structure maybe looks a little bit complicated, but it's actually very, very simple. All the SPVs are 100% owned by Liven AS. They are just in the table to understand where different projects are in what state. The Germany business is also owned 100% by Liven AS, and the German holding company owns SPVs, as in Estonia. As already mentioned, our key differentiation is concept-led product development, putting a lot of effort in the early stage, customer service, and having the customers together with us, thinking and strategy, doing the strategy for the project. What are the expectations for the future homes in this specific location? This knowledge helps us later on in the next stage when we start the sales. Then we have already prepared the customization in the way that it's easy to execute and efficient to execute. So we have our own digital and tools called Home Designer or Kodukujundaja, as mentioned here, that helps customers to design their future homes and also helps contractor to build these homes efficiently. And as already mentioned, 3 years we have been most reputable real estate developer in Estonia. We cover most of the main stages. Most important one, when you buy a land plot, I mean, if you do the right decisions there, then it really helps to get a successful project at the end. The concept phase I already described a little bit. We do a lot of budgeting ourselves. I mean, if you think about the construction cost, that is the biggest cost in our budgets, then doing it right and making all the decisions calculated helps a lot to achieve very good results in terms of how efficient our buildings are. We start the construction usually when we are close to 50% in pre-sales. It depends, of course, the market situation. Last year has been around 35 to 50%. That keeps the investment risk low. The customization already mentioned, we have developed a flexible system to manage these customer changes and options, and supported by our software tools and our own interior architects who help the customers. And we have started one partnership deal with other construction company and development company where they bought in the land and we take care of the sales and the concept. And there we have the 50% ownership, but this is not consolidated in our numbers at the moment. In real estate, things take time. So the first projects were the small ones, but the experience, the founder's experience was from a large company, so it wasn't hard for us to switch to bigger projects quite fast. And from then on, we have increased our land portfolio and the projects are getting bigger and bigger. So the picture of the Regati project that you can see right up is total sales around 100 million euros. Currently, the ongoing projects in Tallinn area are around the city. Many of them in construction. Many of them have multiple phases. A lot of plots already have secured zonings and building rights, and many also have already the building permit available. So to continue after we have enough sales available. Our first project in Berlin, Home Garden, started construction last year, going to be completed beginning of next year. Already have pre-sales 35%. This is mainly test our concept, where we offer the customization that is not so common in Berlin market. And if you ask why Berlin market, then according to the market norms, all the apartments there has to be like fully finished, not maybe as it is made common in Lithuania, where you can also sell not completely finalized apartments, and final finishing will be done by the customers or some specialist company. Then in Estonia and in Berlin, it's quite the same, that it needs to be completely finalized, and that means that it depends on the specific developers if they offer more flexibility or not, and that kind of defines what you can get from the market. And when we started here in Tallinn, then it was also very hard to find customizable solutions and a lot of different finishing options. But we kind of changed the market, and we saw this business opportunity also in Berlin. So testing our concept with the first project, and if it works, and as far as now the feedback has been great. So we continue maybe next small steps as well to validate it once more. Our historical land portfolio, most of the land we bought before the Corona crisis. I must say that the land price was much better back then. And what's important for the investors, that we haven't done any revaluation of or appraisals of the existing land portfolio. This is all valued as the same money what we bought directly from the previous sellers. So no internal deals there as well. And here you can see where we expect that the constructions will be ongoing in different projects and what kind of revenue we expect from these projects. And again, please don't take it as our revenue forecast for these years. It's just our best knowledge at the moment when this project will be constructed according to our plans. But the sales base probably will be a little bit after the completions as well, and the revenues in our business only will occur when the handovers will happen. And sales last year's been quite good. We have already strong pre-sales for the starting year. By the end of the first quarter, we have pre-sales for this year 35 million, and that allows us to expect that this year our revenue will grow around 20%.
I would be talking a bit about the market. Obviously, one of the key factors in our industry is whether Euribor is moving. So looking at back in the years 2022, 23, also 24, Euribor was quite high and was increasing rapidly. Now it has stabilized. There has been a bit of a hike in March, but overall, the Euribor rate is expected to stabilize, according to the European Commission, around between 2.5% and 3%, which is something that likely is a normal level for the money, and without any big hikes, it's going to be also have more or less neutral impact on the demand side. In Estonia, the salaries are expected to increase annually, according to the Estonian Bank, around 5% in the coming years. And as the inflation is expected to come in a bit lower, this is going to improve the real income, and it will allow for the affordability of the housing and apartments to improve. And also, the unemployment rate is expected to remain fairly stable on the level it has been, or even decline going forward. In the German market, the unemployment looks to remain stable, as well as going to be also salary increase being faster than the inflation. So the situation market is also expected to remain fairly stable and supportive. In terms of supply in Tallinn, it has been challenging over the last years. This new supply that has come to the market has clearly exceeded the sales. So the inventory of what's available supply on the market has been growing from year to year. So right now, at the end of the year 2025, our market area in Tallinn and the surrounding area, the supply was more than 3,800 apartments combined. And this includes both the completed and ready apartments, the apartments that are being built as we speak, and the apartments that are offered to the market selling, but are still before the construction, only in the planning phase. And last year, it was clearly the biggest chunk was the apartments that were completed, but still not yet sold. In terms of the districts, as Andero mentioned, we have projects and sales ongoing in several areas in Tallinn. In some of the areas, the offer is quite big. You look at the split in Haabersti, Kesklinn, which is central, and northern Tallinn, Põhja-Tallinn, the offer is quite big. We have some projects in these districts, but also Nõmme and Pirita only have a very small portion of offer. We do have projects in these districts as well, where we clearly are having a fairly good market position. And our efforts so far have resulted in not only us being valued high in terms of reputation of the company, but also people have been voting with their feet and putting, so to speak, money where the mouth is. Last year, Liven, according to the Citify database, recorded the highest number of new contracts sold in terms of units, but also in terms of estimated monetary value. And this is not only a one-off stint. Actually, last year in 2024, it was a similar situation, and Liven had sold the most new apartments, both again in terms of number of apartments and also monetary wise in Tallinn and surrounding area combined. About Berlin market, maybe Andero will touch on it.
The Berlin market, for people, the market is quite similar what's happening in Tallinn, in Europe, or hit the market quite hard, even harder than Tallinn, because it's quite common there to have fixed interest rate for 5 or 10 years. It meant that many people decided when interest rates were high, decided to wait until they go back down. And but it's now recovering, especially the Berlin market, because the deficit is quite high, and there's not been enough new builds in recent years.
All right. Taking a look about the financial data and metrics, and the key metrics. For us, the key metric, one of the key metrics is the new notarized sales contracts, here abbreviated in Estonian VÕL. This is the metric that has which is really reflective on the situation in the market as well. So clearly, from the top left chart, it's visible that in the year 2022 and particularly 2023 were the periods where the market conditions were very difficult and the demand was low. Therefore, we didn't achieve great sales numbers in those years. but the market started to recover in 2024 and 25. We achieved a new record for us, which is 176 new sales contracts. This includes also the first 4 contracts we signed in Berlin, but still also the 171 contracts in Tallinn was our best mark so far. And the question if this is one of stint, then actually if you look the market, now we have closed also the first quarter, and if you're looking the trailing results for the first quarter, so the figure is 205 new contracts. So the market pickup has continued also quite well in the first quarter, and also what we've seen so far in April. Because of the business model we have, we're selling a lot of signing new contracts when the apartment is still in the planning phase or early construction phase. So this means that the handovers of those sold apartments will take place typically 12 to 15 months after signing the contracts. And the handover, which is the top right chart, is reflective of the number of apartments we've now delivered to the customers. Back in 2022, it was high volume, and this lagging figure for the new sales contract did reach its sort of low point in 2024, and it started recovering now in 2025. And again here, the trailing number, as we've given more apartments over in the first 3 months of this year compared to last year, has also moved up. The revenue bar bottom left is going together hand in hand with the handovers. Revenue recognized when we're handing over the apartment. So last year, 49.3 million euros was a new high for the company. And first quarter this year is showing that positive trend continuation. So 54 million is a trailing figure. And together with the revenues, the net profits are rising as well. So 5.4 million euros last year, clearly the best annual mark so far in the history. Trailing figure 6.5, going well. And to look back in the history, so obviously the 2023 and 2024 years, which were crisis years, we are happy that we managed to maintain results on the positive side. It wasn't, unfortunately, due to the market conditions, largely possible to continue good momentum achieved in 2022 throughout this period, but we're glad that we're now back to more normal conditions. And to mention our view that long term we are targeting to achieve more than 20% return on equity, which we now achieved in 2025 and look to maintain also going forward. And the equity ratio without construction loans is 40% target. Right now we're below that, but the coming profits and also the ongoing equity raising will help to improve that ratio as well. But that said, the cost of capital typically is lowest for the secured loans, so it is efficient to have the capital structure biased more towards loans relative to the equity. From the income statement, this is also again to highlight that the handovers and revenue go hand in hand, and also the profits largely reflect the dynamics when the sales volumes are sufficient to cover the expenses. In 2023 and 2024, this is also the time when, for various reasons, but also when the sales contracts were signed with before the inflation in the costs. So this is maybe one of the risks for our model if there's a sudden change in the cost side. But yeah, as said, now we've reached the new normal state back again. And also, who are not maybe too familiar with our balance sheet or any balance sheet of real estate developers, then the expenses that are occurred when the project is started, acquiring land, development expenses, interest expenses, and also the construction expenses are capitalized in the inventories until the apartments are sold and delivered. So that's why more than 80% of all the assets are sitting on the inventory row. This includes various stages of the projects. And on the liabilities and equity side, we look to, this is a capital heavy operation, so we are looking to utilize more efficient funding options compared to equity quite extensively. Therefore, our liabilities are also may seem relatively high. And the split of the asset and capital structure, so it's a mix of assets that are in construction or already. Because these include more costs, construction costs are included there. These are making up the bigger chunk of the inventories, and as we are valuing the land and acquisition cost, therefore the projects which are in planning and development phase are featured less in the assets. And on the loan side, as said, we look to employ more efficient capital means for us. So this means bank loans. Construction is usually financed up to 100%, also the bank loans. So there is a mix of publicly listed bonds, bank loans, still some investor loans, and construction loans. In 2026, we can sell the apartments that were completed before the year start, and also the apartments that are expected to be completed this year. So the capacity is for the full year to deliver up to 268 units, and this would result in 86 million euros in revenue. This is not fair assumption that we will be selling everything, but based on the past experience, we expect to deliver 2/3 of that volume. So this means about 59 million euros, which is 20% growth year-on-year compared to last year's growth. 7 million euros already recognized as revenue in the first quarter. 35 million is signed in the pre-sales agreements. So there is not that much to go for achieving the full year target. And together with the 20% revenue growth, we also expect to grow the net profits and have the return on equity increasing or remaining about 20. So again, as said, last year's result, which was achieved, don't see it as one-off, and we look to move on and continue growth from that level. The ongoing share offering is at 4.68 euros. This is a fixed price, not the range. We aim to list our shares in the Nasdaq Baltic, Nasdaq main list. The subscription period is started last week and it ends next Wednesday. It is 3:30 is the official offering period time, but some foreign brokers may end their subscription period some hours earlier. Key shareholders, the founders and key investors are not looking to sell. Actually, it's public information that they have instead bought some more shares. But to formalize this, they have also signed an agreement, and they're not going to. Basically, there's a lockup for a 12-month period. The transaction itself is 7 million euros worth of new equity. 1.7 million euros worth of existing shareholders looking to sell along. And in case of oversubscription, company can increase the offer by 4 million more euros. The existing shareholders who are exiting, this forms about 3% of the old shareholders. The option to exit was offered to all shareholders, but most of them chose not to sell. And as said, the proceeds from the offering, we are looking to capitalize on the opportunities we see in the market to acquire new land plots. So overall, Liven is a residential real estate developer, so the focus is clearly on developing homes. We have a good product and service which is clearly appreciated on the market, which has resulted in high valuation in reputation and also the number of homes sold and the market share. We have a very strong portfolio which allows us to continue generating good results in the coming years, and also we're now in a position to continue also in terms of earning profits and achieving our return on equity goals. So now it's time to address the questions. We have also some questions that we have collected from the market before, and we tried to address some of the questions also during the presentation, but we can also go through this one by one. So one of the questions was 2025 a one-year record, and now you're falling back to the normal results seen in the last years. So as said, that we are forecasting to even grow the revenues by 20% in the ongoing year. So we're progressing well on that. And also to highlight that 2023 and 2024 clearly were not normal years in terms of new contract sales and also the profitability. So we're happy that we managed to stay on the profitability side during these years. Also for the context, when we're talking about the record year in 2025, then I think the most relevant here is the number of new contracts, the new sales contracts that we signed. And I think also for investors, this is one of the key metrics or key performance indicators to follow. There has also been a question that why is the price book ratio so high? So there are many valuation methods to use. Price book is certainly one you can look at, but I said the trouble with this metric may be that the plots that we have in our portfolio are in acquisition value, so they're not reflective of the market value. Is one side, and the other is that the price book is often used in valuation together with the return on equity metric, and this correlation is looked together. We have not provided the valuation research ourselves, but we have commissioned Enlight Research to analyze our company and provide their opinion of the valuation. This report is publicly available for everyone to access, and also the price book and return on equity relation is well described and visualized in his report. The question has been that why are the minority investors selling? So as I said, it's only 3% of the old investors, and actually most of the minority holders who were offered this option did not choose to sell. I don't know, Andero, if you would like to add further comments to this question.
In terms of minority shareholders, I mean, yes, we had the discussions with all our shareholders. We asked them about their plans and also about the pricing when we prepared our IPO, and that also guided us where we are at the moment, how we price the company. Of course, the institutional investors' feedback was also considered, and we offered all our shareholders opportunity to sell, and we are really glad that it was only nine of them that decided to sell, and the rest of the shareholders were continuing being our shareholders and continuing with our together same journey.
Thank you. There has been some questions about what is the free float. The free float is expected to be between 20 and 25%. There are some concerns raised during some other real estate companies' IPO performances. This is maybe difficult to comment on other companies, but I'd like to highlight that we are coming to the market in a situation where the market timing and perception of IPOs perhaps is not very enthusiastic, and clearly there is no euphoria on the market for all issues. And also for one of our strengths, we'd also like to highlight that we have a fairly simple and clean organization structure. So all the project SPVs are 100% owned by the parent company, and one of the joint ventures where we have only 50% stake, this company is not consolidated line by line, and impact from this operation comes in the income statement right before the net profit line. And there have also been some concerns about the liquidity of the stock on the market. I think, unfortunately, for all the Baltic equities, the liquidity has always been somewhat of a concern, and it is in a way difficult to promise that Liven is now going to be, for some reason, an exception in that regard. This is clear, but we do have the dividend policy in place since 2023 to distribute 25% of the pre-tax profits annually as dividends. So for investors who are to alleviate at least somewhat the liquidity issue, so there is a mechanism also to feed some of the earnings in the form of dividends and cash flows to the investors. So there would be some at least some liquid movement in that form. It is always possible to send us questions also via email, investor@liven.ee. I said the subscription period started last week. It ends in next week, on Thursday, on 7th of May at 3:30. For some brokers, it may end sooner. But we would like to thank all the interested parties for participating on the webinar and providing good questions. So, thank you.
Thank you.